Well, those are the top stories that we are tracking. I'm Shireen Bhan, and you're watching our Budget Centimeter. The countdown to the Union Budget has begun. All eyes on Finance Minister Nirmala Sitharaman. She faces the daunting task of unveiling measures to push growth without upending the fisc. Now, a pre-budget expectation survey conducted by Thornton Bharat highlights the need for bold policy announcements to spur investment in the infrastructure sector and boost consumption. 67% of those surveyed believe that the Finance Minister should focus on propelling investments in infrastructure and have listed it in the top 3 focus areas. Meanwhile, 54% have ranked the need for consumption boost in their top 3 focus areas. The respondents ranked agriculture, healthcare and pharma and manufacturing as the 3 sectors that should ideally get the greatest thrust in the upcoming budget. When it comes to taxes, 55% believe the government should maintain a status quo and not tinker with rates. This despite the fact that the fiscal deficit is ballooning and government revenues need to be shored up. However, 90% of the respondents feel the government should provide some relief to individual taxpayers. Well, that's just a quick snapshot of the Thornton Bharat survey done ahead of the budget. Vikas Vasal, the National Managing Partner Tax for Thornton Bharat, joins us. Vikas, many thanks for joining us. You know, as we go into the budget, what your survey very clearly articulates is that those who have been polled, and this is more than 5,000 respondents, believe that the economy is on a path to recovery and growth. In fact, 60% believe that the Indian economy is on a growth path, and about 67% are optimistic about FY22 spending. So the mood has changed in comparison to what we saw in the last few months through the course of the pandemic. But what's the big expectation on how much the Finance Minister can really deliver this time around?
I think most of the business respondents have clearly stated that the expectation is twofold. One is the budget should provide impetus and boost to the investment, whether it is in terms of infrastructure or manufacturing. And second key expectation from the respondents has been that the budget should spur policy measures which should boost consumption in the economy. So investment and consumption are the key themes which people are looking forward to in this budget. Interestingly, as you pointed out, on the tax side, while businesses feel, and most of the respondents feel, that on the corporate tax rates, if the government is able to maintain a status quo, that is, it neither increases nor decreases, nor introduces any kind of new COVID cess or solidarity cess, I think that will meet the expectations of the industry. But while the same set of respondents, when it comes to their personal taxation, more than 90% or almost everybody expects government to do something, either in terms of increase in the base rate or increase in ATC deduction or increase in standard deduction. So I think there's a dichotomy over there when it comes to corporate tax structure versus the personal tax structure. And also in terms of the sectors that we talk about, really the expectation is that the key sectors...
Yeah, I just want to address the issue of personal income tax. Because as you point out that corporate India is hoping that there is a status quo, there shouldn't be any tweaks necessarily at this point in time, either up or down. But on the personal income tax side, the salaried class is hoping for some relief. And that links back to the larger theme of consumption and boosting consumption. Now, if I were to just take a look at the individual taxpayer budget wish list, raise the exemption limit under Section ATC, 31% want that to happen. Raise the standard deduction. This could be something that the government may explore or look at, is what we're given to understand. Hike basic exemption limit, 38% believe that that should be taken forward. So of this wish list, Vikas, what do you believe is the most realistic expectation?
I think keeping in view the fiscal deficit and shortfall in revenue collections, government hands are tied in terms of granting anything major as far as the tax relief is concerned. Practically speaking, what the government can look at is 2 aspects from the individual's perspective, which help in achieving twin objectives. And these 2 things could be: 1, introduce an additional deduction either as part of ATC or separately for investments into infrastructure bond and infrastructure related activities, which helps government garner larger resources as well as provides some incentive for the taxpayers. Second is drawing clue from what government has already done for this year, which is converting the LTC claim into expenditure side of tax reduction, Similar thing can be rolled out in the current budget as well, that you allow a deduction of X amount, say 50,000 or so, in terms of your expenditure that individuals incur on travel or tourism, hotel, or any of the goods on which they pay GST and which is manufactured in India. So I think these two look more realistic. Other than that, it looks very optimistic otherwise.
Yes, I would agree with you, and I think given the fact that the travel, hospitality and tourism sectors have been the worst hit on account of the pandemic, perhaps it would not be an unrealistic expectation to hope that the government will move on that specific measure, which has been the long-standing demand of industry through the course of the pandemic. Because before I let you go, let's talk about investment. We talked about boosting consumption, but on the investment side, what are the specific measures that you believe are possible? There's a long wish list, but what do you believe is possible?
I think a couple of things the government can definitely do in this year's budget, and many of these could be revenue neutral, or there could be some tax output. One, further open up the foreign direct investment in terms of insurance and other sectors, which is already on the cards. Second, liberalize FAMA further so that the foreign investment coming either through FTA or FPI comes in with a free flow of money over here. Third, already some steps have been taken under the Atmanirbhar and Make in India schemes. I think provide more incentives, which could be investment linked rather than profit linked for the domestic industry to make large scale investments and generate employment in India. So a couple of measures like this can definitely help the government and the economy at large.
And as you point out, revenue neutral measures, that is what the government is going to want to focus on, given the fact that it doesn't want to blow up the fisc further. Vikas Vasal, many thanks for joining us and taking us through the highlights of the Thornton Bharat survey. Ahead of the budget, here's the wish list of over 5,000 respondents who were polled between the 13th of January and the 20th of January and what they want from Finance Minister Nirmala Sitharaman. We'll take a break, but we're not done with the budget. When we return, the KPMG survey reveals what respondents want for taxes and dispute resolution from this year's budget. That and more when we will be joined by Sunil Badla, the partner and head of financial services tax at KPMG, when we return. You're watching our budget centimeter. KPMG has released the findings of its pre-budget survey for 2021 on tax rates. Respondents to the survey largely believe that the government's revenue needs can be met through increased collections as the economy recovers, rather than through the introduction of new taxes. Many respondents also voted for improved technology-driven tax enforcement. With regard to dispute resolution, a small majority of respondents feel that faceless assessments and appeals in both direct and indirect tax matters will lead to a reduction in disputes. A vast majority also feels the government should introduce a mediation scheme in the budget to enable negotiated settlements of tax disputes. For MSMEs, a large number of respondents have voted for the CBIC to introduce a customs-assisted assessment and also exemption from customs rules of 2020 for certified importers. The big one, almost 70% of respondents favor a regime for direct overseas listing of Indian companies, a promise that was made in the previous budget. To discuss this and other findings from the survey, I'm joined by Sunil Badla, the partner and head of financial services tax at KPMG India. Sunil, many thanks for joining us. The top of mind issue at this point in time is, are we likely to see an increase in taxes or perhaps the imposition of any fresh tax? I'm looking at what the survey shows. The question posed was, how do you expect the government to fund public health expenditure in 2021? 20% believe it will be done through increasing existing tax collections. 2% believe there will be an introduction of new taxes. 29% believe that there could be a COVID-19 cess. And 49% believe through improved use of analytics. Is this more hope or do you believe that this is a realistic expectation, Sunil?
I think this should be a realistic expectation because, everyone knows that, government is, short of tax collection because of the pandemic and because of the situation that we are in. But so as the businesses are. And therefore, I think it will be wise for the government not to impose any additional levy of taxes at this point in time. And, these are difficult times. I think, when this will pass. And I'm pretty sure that, barring small COVID cess, which is being talked about, I do not expect any new levy of taxes being imposed by the government.
So on the COVID cess, Sunil, do you believe that there could be a hike both on the current health and education cess? Is that what you're expecting as well?
Yes, if at all it comes, it will be in addition to current health and education cess. So, the expectation is that maybe it could be in the range of 0.5 to 1%, or maybe at max 1.5%. But again, the survey clearly reflects. The survey clearly reflects that it's only a small population. It's only 29% of the respondents who actually believe that there should be a COVID cess.
Yes, that is correct. And our colleague Tibdi Jaipuri has also been reporting that one of the things being considered at this point in time is a hike in the education and health cess. But as Sunil was pointing out, between 0.5% to a maximum of 2%. But a final decision, of course, will be taken when the budget is revealed. But let's talk about the other focus area, Sunil, and that has to do with improved analytics. Now, we've already in the previous budget made the promise of moving to faceless assessments. We have moved to faceless assessments. The last budget brought in the taxpayer charter as well. We have seen a crackdown by the GST authorities as far as input tax, frauds, etc. concerned. On the income tax side also, there have been a flurry of searches and surveys. What's the expectation in terms of perhaps some new measures that may be announced on this front?
So, as you've seen, our survey clearly reflects that, although it is a small, majority of the respondents who are very optimistic about the new schemes of faceless appeals and assessments, there's also the population who are actually not yet clear as to whether it will be good or bad. But I would say largely people are quite optimistic about the new scheme, and therefore, this is the first step in the right direction. Now, to improve this and build on this, I think the government must consider some kind of a mediation scheme, which I think you have noticed in the survey. A vast majority actually believes that there should be a mediation scheme, which essentially means that, let's say, if the tax officer were to actually dispute a particular issue, then the taxpayers should have an opportunity to take it to, let's say, an independent committee comprising of, let's say, independent professionals, retired judges, and so on, so that they can actually objectively and independently look at what the issue is, and therefore it provides an opportunity to the taxpayer to actually come up with some kind of a mid-path with the tax office and some kind of a negotiation. We've seen this working very well with a few countries across the globe, and I think this is something that India should consider very, very seriously, because this will go a long way in reducing the disputes, which is what the government's stated agenda is.
That is correct. 77% of the respondents polled believe that the government should introduce a mediation scheme, as Sunil was pointing out. But Sunil, finally, before we let you go, one of the other contentious issues has been digital tax, and we've already seen the government move in that direction. And while, the West has said that this is a unilateral decision, India has defended its actions. Do you foresee any further changes or perhaps something fresh being introduced on that front?
No, so I think we have discussed this enough, and lot of debates, deliberations have happened, including with the government officials, and I think India has taken a very clear path or position, so to say, and therefore we actually consciously kept this out of our survey, because we believe that the government has clarified their position, and therefore it's unlikely that there will be any change. But that said, I think very clearly we also do not expect any new levy on account of digital taxation. So I I think if you ask me, my bet is we will be where we are.
Okay, so status quo is what you expect on the issue of a digital tax. Well, Sunil, thanks very much for joining us here on CNBCTV18's Budget Centimeter. We will, of course, be checking in with KPMG through Budget Day and bring you our live CNBCTV18 KPMG Budget Centimeter. We will be polling respondents on how they believe the budget is likely to impact the economy as well as their own business decisions. This is going to be a live poll that we annually do, and you can watch that right here on CNBCTV18. Sunil, always a pleasure. Many thanks for joining us here on CNBCTV18. Now, one of the big focus areas, cleaning up India's stressed assets, and it will need more than one bad bank. And so, India must look at setting up multiple bad banks. That's the word in from Uday Kotak, the MD and CEO of Kotak Mahindra Bank and the president of CII. But Kotak has gone a step further. The CII has recommended that these institutions should be set up in the form of alternate infrastructure bonds, or AIFs. It's also recommended that these bad banks be given more flexibility in terms of the stressed assets they can buy. Here's Uday Kotak in his conversation with me.
I think time has come for us to be looking at multiple bad banks, and we at CII have recommended that. In a sense that if you create multiple bad banks, you create a market clearing mechanism for sale of distressed assets. And we are recommending it in the form of a AIF structure or alternative investment fund structure. There is a huge amount of capital, and on that I have no issues. If we want significant amount of global capital coming in, which is in abundance, in addition to domestic capital, to clean up our banking system.
That's Uday Kotak. So how feasible is the idea of a bad bank, and what can we expect on this front in the budget? Lata joins us now with more. Lata, you heard what Uday Kotak is proposing. How will it work?
A bad bank idea in the budget had been doing the rounds, but it was only after Mr. Uday Kotak said he expects the AIF route to bad bank that we thought we should explore more on this issue. AIF is alternate investment funds. They are funds which buy up big companies. Now, this idea of several bad banks, many funds coming in and buying stressed assets through the alternate investment route is something the budget may give a push from what we pick up from sources. This story actually begins with the Reserve Bank itself, which, separately, besides Mr. Uday Kotak, Mr. Anil Agarwal also told us that he is planning to raise $10 billion of a fund. He is being one of the investors, gets other big investors, and that fund will invest in stressed assets. So it's both Mr. Uday Kotak dropping the hint of AIFs and Anil Agarwal, which set us picking up the buzz on a different kind of bad bank. How will this work? Much before this, unconnected to the budget, the Reserve Bank had put out a consultative paper that will come up for you, had put out a consultative paper saying that, you should have, it was a paper on securitization. But basically what that paper said is banks should be allowed to sell stressed assets to any regulated entity. At the moment, they are only selling it to asset reconstruction companies, ARCs. They don't sell it to AIFs. So AIFs cannot buy directly a loan. They are regulated by SEBI, and SEBI is a securities regulator. So AIFs have to buy only securities. At the moment, what they do is the NPAs that they want, they request one of their ARCs to buy it, asset reconstruction companies. The asset reconstruction company buys it, issues security receipts on behalf of that asset, and that is sold to the AIF. So that's how the AIF comes into the stressed loan market. Now, the expectation was, unrelated to the budget, that the Reserve Bank may tweak its rules to allow banks to directly sell to AIFs. The SEBI, on the other hand, may rewrite its rules to say that AIFs will be allowed to buy loans and not just securities. Some such tweaking of rules was always expected. But where does the budget come into the picture? The budget is in the picture because there's a tax angle. Now, let us assume an AIF buys a 1 rupee asset for about 20 paise, and then they're able to turn it around and they sell it to another promoter at about, say, 50 paise. So 30 paise or 30% is their profit. If it is treated as income, then it gets a 40% tax in India. That would make it unviable. So what the AIFs want is that the budget make a statement that these will be treated as capital gains. If it's capital gains, it's much less, 10 or 20%. And therefore, that is one expectation through the AIF route, that the budget give a tax SOP. Separately, what is the traditional bad bank idea? The traditional bad bank is that it should be a public sector company. So the expectation under that frame of reference is that the government creates an SPV, a special purpose vehicle, or a body which is 100% owned by the government and capitalized by the government. This bad bank, this entity, assesses all the stressed assets in the banking system, gives a cutoff. Okay, I'm going to buy all the assets over 1,000 crore or whatever, 5,000 crore. It assesses the assets and says, this one I'm going to buy at 30% the book value. This one I will buy for 40%, depending on their due diligence. Now, banks are told, if you either sell it to them, sell it to the bad bank for the price they ask. If you are not selling it, to that extent you have to make provision in your books. So this is an incentive for the banks to sell. Once the bad bank has all the assets, because it has collated it, it is able to bargain with funds and sell it, auction it to another promoter, to another fund for turning it around. So that is how the traditional bad bank is expected to work. Usually it doesn't require a lot of money, because for the assets it buys, it may not even give money to the banks. It may give only receipts, IOUs, securities. And then when the asset is turned around, the value of the bank's securities go up and the banks encash it. That is the traditional bad bank idea. What we are given to understand from sources is that this traditional bad bank may not be something the government will attempt this time, but it may make it easier for alternate investment funds to come around and buy stressed assets, as Mr. Uday Kotak alluded.
Yes, the AIF route could be the route to dealing with NPAs. Lata, many thanks for joining us, and of course we are going to be tracking that very closely. With that, it is time for us to wrap up our budget centimeter. Stay tuned to CNBC TV18. More coming up.